What's up? What's up, guys? Welcome to another brand new episode of Live Forex Trading with your host, Peeling Mindset. We are back again, back to the public again on the YouTube, and man, this is amazing. Welcome to another brand new episode. We are checking the system for the first few minutes, and I mean it's running pretty well, so which is good, which is actually pretty good.
Hey Anuj,
Alrighty, so let's just see what the market today is doing, right? So we're gonna break down the chart. We're gonna see what the price action in today's market's like. And this is just gonna be amazing. Just give me a second here. Trying to fix this. All right, let's do this. Trying to fix my terminals. Our terminals all up and running. So let's break down today's chart. See what's exactly happening. Right, so if you're looking at the gold right now from a monthly sort of a perspective, and if I have to erase all of the drawing, right, all of the charting tools on my chart right now, look at the monthly candle. Monthly candle right now is rejecting the top. Pretty easy to say that, hey, you know what, the monthly candles rejecting the top, the resistance being rejected, and price right now is coming back in this range. We do have a monthly support. Current monthly candle has 6 more days left for its close. Now when we head down to the weekly time frame, we can clearly see candles actually made some sort of resistance and planned to come back below this range, and it's actually very close to this weekly support. Actually, we have tapped off the weekly support. If I have to note down the weekly support, right, so this area right here is a potential reactive area. 1782 flat is a reactive area. If the price is planning to move down below, more than likely on a weekly perspective, the wick could be filled and the price could actually start pushing down, and this 1756.30 is the ultimate target if the price is going to be bearish. Otherwise, because we are very close to this weekly sort of a support area, we might reject off of this area and we can start pushing up. That could be the case. But right now, calling out a buy right now is not that logical, especially because on a daily time frame, we can see that, hey, you know what? Even if this was a weekly support area where the price did a fake out before, today's daily price action is kind of a bearish price action. Even if this is a weekly support area, I would bet on the fact that, hey, you know what? Price has rejected the top. And right now, the most recent trend on a daily sort of a perspective is a bearish trend. So I would love to see how the price is going to react around 1782 flat. On a daily time frame, I can clearly see that a potential target area could be 1768.80. On a Wednesday, we have seen a lot of volume in the past. So it's going to be interesting to see how the price is going to move through this area, right? So I'm going to see if this could be a point of interest. This could be a price of interest if price is going to react in any sort of way around that area. Right, so for now, obviously on a 4-hour perspective, we are pretty bearish. Whoever saw this 4-hour candle forming in the past few hours, obviously sales did make sense. The structure only allowed to take sales. Anybody would be anticipating a daily low retest. Now that's what's happening at this point in time. We're obviously late for the sales that happened somewhere around here. So yesterday, what happened was we actually broke this 4-hour support. That was the 1790-70 flat sort of area. We broke the support, did some sort of retest. At this point in time, candle still below that 4-hour support area. So if the price is moving down and if the bias is a sell, all right, let me note down. All right, so bias at this point in time is sell in gold as long as price stays below 1790.70. Pretty clear, right? Okay. So, also on a 2-hour perspective as well, sell is pretty clear. I mean, sales pretty clear. At this point in time, the 2-hour candle is about to close in the next 7 minutes. So in the next 7 minutes, if this 2-hour candle closes bearish, there's a very high chance the next 2-hour candle might make a top wick, a high wick, and then start filling the wick at the bottom, and then start pushing down, retesting the daily low. So that's the anticipation here. That's what the trade's gonna be, you know, anticipating a daily candles, a daily low retest. Oh, let's see on YouTube. Tutasios is saying, do you do lives daily? Yes, we do lives every day, but we are limiting the live stream to our private group at this point in time. So the streams for YouTube, the free streams are only available from Wednesday, Thursdays, and Friday, and some selective Tuesdays. But obviously, you know, we're trying to focus on the group, our group. We do have a private Discord server, and we work in a team right there. So at this point in time, it's just limited to the team, but we do streams every single day. Every single day. Every day grinding, sir. All right. All right, at this point in time, let's see what happened in today's market, and let's see what are the news events. All right, so we have unemployment claim tonight. So in about 30 minutes after the market open, we have the unemployment claims, and they're actually looking at good numbers. So that means if numbers are going to turn out to be good, more than likely gold should dump down, and that's what the price action is looking like, more than likely to push down. Right, so what happened in today's news, right? So was there any major news, any breaking news in today's market? Let's see. Dun, dun, dun. Our MPC continues to reduce monetary stimulus. Okay, so talking about how pound could actually lose its strength. Okay, interesting. It's kind of interesting. All right, so the New York market's going to open up in the next hour and 5 minutes. So we are just waiting and waiting for the market open, right, at this point in time. Now, if sales are coming in, if this hourly candle finally closes below 1787.90, what might happen is we might get a retest around this area, potential retest area, and we might start pushing down. So the range is in about 45 pips range, and it's a good range. It's actually beautiful ranges. So sales kind of do make sense. Okay. Alrighty. Beautiful. Two more minutes left for the hourly candle to close, and the bias is a sell. Bias is a sell in pound, in gold right now at this point of time. All right. Beautiful. Let's look at pound yen and see what pound yen is doing. Right. So pound yen at this point of time. I mean, let's go to the monthly time frame and see what's happening on a monthly perspective. Our previous monthly candle closed bullish with the wick on the top, showing signs of continuation above the resistance. At this point in time, the monthly candle has wicked enough, and if this is a liquidity grab to push further up, I mean, this is just in a amazing posture. On a weekly sort of a perspective as well, we do have support forming around here, which is pretty cool, because if the price is moving up, more than likely we need a support, and the support has formed already. So we just need some sort of positivity, some sort of optimistic news or a catalyst in pound yen, or for pound yen to drive up. Obviously, we are starting to reject the bottom, this 152.65 sort of a level, and the right now it's actually kind of rangy. Daily time frame is kind of rangy, so probably on a daily point of view, buys above 154, 185, it's actually looking good. So we need to see candles rejecting the bottom, which it's actually doing right now, and then start breaking the previous candle's high, and then start pushing up. That's going to be amazing if that happens. Obviously on a 4 hour, it's a rangy, super duper rangy, so we don't want to take a trade right now. I mean, price can do a fake out, but it's kind of rangy at this point in time. So yeah, it's pretty hard. It's actually pretty hard. Pound yen is very hard, difficult to trade right now. Yeah, pretty difficult. Yeah, so I would be looking for buys only above 154.510. All right, so we are 1 hour away from the market open, and the hourly candle in gold actually closed bearish below 1787.90, with the wick at the bottom showing signs of continuation. So what I might do is I might actually wait for this current hourly candle to make a top wick, which it has already made. In fact, you know, I would love to see a deeper wick. That way I would be more confident, but hey, it looks like it can actually start pushing down, breaking the 30-minute candle's low. So what I might do is, well, let's see. I need to open up my magic keys. Magical keys. Right. So I'm waiting for the first 5 to 15 minutes out of this hourly candle in gold. Bias is a sell, clearly. So we waited for the hourly candle to close below, which is pretty cool. That's what happened. We'd love to see this hourly candle dipping a little bit higher to this potential retest area. So, all right, at this point in time, this is a potential retest area. Potential retest area. This right here, right? So one of the ways to catch it is just to keep a pending order. I mean, pending order could be an idea around high volume time. This is obviously a high volume session time, and New York session, well, obviously we do see a lot of volume, right? So which is pretty cool. So if it's going to actually move down, this is a good idea to catch the trade with a pending order. I could actually catch it with a pending order. So what I'm doing is, if the price is moving down with volume, I'm actually placing a pending order right here. Pending order below the 30-minute candle's low. All right, that's good, pretty good. Pretty good. So this is actually a risk management trade, because the idea of entry is an impulse entry. So an impulse entry should be followed by extreme caution, or I would say active risk management. So if I'm willing to manage my risk, what I should do is I'm not willing to see any abrupt rejection. If I see any abrupt rejection, I might close well, half or even some percentage out of my position. So my pending actually got activated right here. Pending order got activated. My stop loss is above the previous 15-minute candle was high. Anticipating the price, anticipating the candles to respect the previous 15-minute candle was high, and then start pushing down with volume. Obviously, hourly candle closed below 1787.90, showing some sort of confidence in a push down. So at this point in time, my positions got activated. So my position right there, right? So at this point in time, this is what I'm going to do. If the candle starts breaking its own high, I might close some percentage. So if the hourly candle starts breaking its own high, it's kind of logical to break its own high and retest 1787.90. Oh, we are starting to push down here. Beautiful. Beauty. Beautiful. You just need some sort of volume in the market. Obviously, in the New York session is the time where we see a lot of volume in, and this kind of makes sense. The structure is a selling structure. Buys right now, I don't think it fully makes sense yet for me, so I'm willing to bet more on the sales than anything else, right? So at this point in time, hourly candle, let's see, hourly candle, this is the first hourly candle that broke below the hourly support, so we might see a retest. A retest is a better idea, definitely a better idea. We're still hanging around the first 15, the first 5 minutes out of the hourly candle. Obviously, we're just hanging around there, which is not a good sign, to be honest. The first 5 minutes out of the hourly candle closed bearish. If we look into the 5 minute candle, 5 minutes sort of a time frame, still respecting the previous 5 minute candle's high, which is a good sign. But we are just hanging around there. So this is pre-New York session. Anticipating some volume in the market. So let's see what's going to happen. All right, so active risk management side by side. What I'm going to do, partial stop loss here. Okay, beautiful. Yeah, 5 minute candles printing bearish, which is good. Current 5 minute candle respecting the previous 5 minute candle's high. So wouldn't want to see any abrupt rejection at the bottom. Hourly 15. Well, 2 hour is still looking good. Technically, this 2 hour candle could actually dip a little bit higher. So that's the only thing I'm actually keeping in the back of the head. I don't want to be the part of this retracement, right? So retracement is expected. If retracement is going to happen, I should be willing to close my position, right? So what I'm thinking is, if this 2 hour candle is going to take some time before pushing down, if it's going to breathe, if it's going to make a top wick before pushing down, filling the wick, it's kind of logical, and it's something we've seen in the past. So if I want to be an active risk manager, I might close some percentage if this candle starts breaking its own high. Simple as that. As simple as that, you know. I should be willing to close some percentage, because I don't want to lose all the money that I applied on the trade, right? I should be able to lose less than what I applied at the beginning. That's one of the That's one of the parts of risk management. So at this point in time, 15-minute candle broke the low, still looking good for sales. A potential target area, an early target area is 1873.80, but at this point in time, we are starting to reject the bottom. So I think this is an early trade that I took. An early trade. To win the position, UJ. Now UJ is rangy, super rangy. Yeah, I'm thinking about managing my gold position here. Right? It's still looking nice. Hourly candle made a top wick. I mean, this is a good wick, to be honest. Now, at this point in time, if the hourly candle starts breaking its own high, I'm definitely going to close a half of the position or even more. All right, so we are pushing down. Beautiful. Beautiful. Beauty. Beautiful. Anticipating volume. Haven't seen a lot of volume yet. We are still hanging around 15-minute candle, about to close in the next 5 minutes. If this 15-minute candle breaks its own high, I might close some of the percentage out of my position. But for now, it's kind of looking good. There is a potential that candles might breathe a little bit and reject 1787.90 before pushing down. So that could be the case. Otherwise, it's actually looking good. 15-minute has 5 more minutes left for its close. 5-minute candle close bullish. Not a good sign. Not a very good sign here. Now let's look at 1 minute as well. 1 minute. All right. We are starting to range on a 5-minute. Looks like unemployment claim is going to be the catalyst that's going to move the market here. Yep. Pretty easy. First 15-minute out of the hourly candle, kind of breathing as expected. Yeah, so impulse entry at this point of time with a pending order is kind of failing. That's all what's happening here. So obviously, 15-minute candle hasn't broken its own high. That's kind of my reference point to where I'm going to close half of the position. Because I have to define the rules. We cannot just take a trade blindly. Obviously, especially a impulse entry should be followed by a lot of risk management. So if the trade is going to work, it's kind of logical. There's a clear traffic on the left hand side. We broke below the support. We also made a resistance. So there's a resistance there. The price is respecting the structure, respecting the highs, breaking the lows, and that's what happens in a clear bearish market. And if the bearish market is actually going to push the price of gold even lower, I mean, it's logical. You just gotta wait for this 15-minute candle close. In the next 2 minutes, we will see what's gonna exactly happen. Is this 15-minute candle going to close bearish? That's the real question, right? Is it gonna close bearish, showing signs of continuation, or is it going to reject the bottom? If it's gonna reject the bottom, more than likely, it's gonna breathe. It's gonna take time, and it's only gonna move around the unemployment claim times. We are kind of patient. Kind of patience, sir. Kind of patience, sir. Alright, so the 15-minute candle looks like it's closing bearish, respecting the structure, which is actually a good sign. Let's see if the bearish market is pretty strong. Is it strong, or what's happening, right? That's the question here. So if this 15-minute candle could close bearish, man, that's amazing. That is actually amazing. Let's see. Is the 15-minute candle going to close bearish, or is it rejecting the bottom? $19 more seconds. All right, so finally, 15-minute candle actually closed bearish with a wick at the bottom, showing more signs of continuation. So this is a small candle. This is a really small body in relation to volume. We haven't pushed down significantly. That was the first 15-minute candle, obviously, and it's still breathing. The hourly candle is still breathing. We aren't rejecting the bottom. We aren't rejecting the top. It's kind of indecision right now. The body in relation to volume is pretty small. So right now we're just waiting. Obviously the structure hasn't changed yet. The structure is still a sell. For me, it's a sell. If somebody's going to come in and argue with me saying, hey, it's a buy, I mean, it doesn't make sense to call it a buy yet. I have to see how this 30-minute candle is going to close at this point in time. The 30-minute candle has 15 more minutes left for its close. If this 15-minute candle breaks the previous 15-minute candle's low, it's only showing signs. Oh, all right, so we are pushing down here. Beautiful. All right. Beautiful. The volume in gold is comparatively low than usual days of Wednesday, but yeah. We are still pushing down nice and slow. Oh, beautiful. We are starting to push down here. Beautiful. Amazing. Yeah. Beautiful. Beautiful trade, man. Starting to push down. Amazing. Yeah. Beautiful. Ooh, starting to push down here. Beauty. Yep, we are pushing down. Definitely pushing down here. Beautiful. Wow. We are rejecting the bottom at this point in time. Are still anticipating a volume to push the price down. Obviously, didn't secure at the bottom at this point in time. Looks like, yeah, because I opened two positions with the same lot size, so I should have secured with like 20 pips a cumulative profit. But at this point in time, it's rejecting the bottom, which is not a good sign. But obviously, it's breathing. The hourly candle is still breathing, so kind of relaxed here. Yeah. All right, 5-minute candle rejected the bottom, but still is ranging side by side. Not a lot of volume seen in gold. Not a lot of volume. Yeah. Yep, UJ is pushing up, which is a good sign. If US dollar is gaining its strength, gold should more than likely push down. Now that's just a simple correlation, right, in between gold and US dollar's strength. So at this point in time, gold is still breathing, anticipating a daily candle low retest. Right, at this point in time, it's just hanging around over there in the position, still letting it breathe. I'm willing to let this candle, this position breathe. So we're just gonna hang around for more 8 more minutes, and we'll see what's gonna happen in the next 8 minutes. If I don't like it, I might even close it because it's taking a long to move. More than likely, the catalyst is going to be unemployment claim, as we talked about. Now, gold isn't showing a lot of volume like the usual days. It's obviously Wednesday, and on Wednesday we do see a lot of volume, right? So we'll wait in. Beautiful. We're pushing down. It's still respecting this structure on a 15-minute sort of a structure, 30-minute sort of a structure. The structure still kind of makes sense to push down. It's not a surprise that it's moving down and we are capitalizing on this move. It's just pretty simple, pretty normal right here. Now we are in the position for 23 minutes, which is kind of long, but hey, it works. Sometimes you just got to hold it because the structure makes sense. We just need a catalyst in the market. And the market isn't showing a lot of volume, so we got to wait. You know, sometimes when positions don't make sense anymore, we close it because there isn't any rule about holding the trade for this long time or that long time. Whenever we are uncomfortable, we get out of the position. Whenever we are comfortable, I mean, we hold on to it, right? Simple as that. So we are kind of waiting at this point of time. 5-minute candle is going to close in the next 18 seconds. 15-minute candle, on the other hand, is going to close in the next 5 more minutes. So we'd love to see if the candles are willing to push down. We are still maintaining this structure. Haven't seen a lot of volume. Just need a catalyst in the market. That's all. As simple as it could be. Just need a simple catalyst in the market. 30 minutes about to close in the next 4 minutes. 30-minute and 15-minute about to close in the next 4 minutes. So the previous 5-minute candle closed bearish with a confident wick at the bottom, showing more signs of continuation. So we are seeing signs of continuation, just haven't seen the volume, right, as we talked about. All we don't want to see is candles rejecting the bottom pretty hard, abruptly. If that's going to happen, it's a good idea to close the position. Whenever we are uncomfortable, you know, we have to take the bullet. Because there's no point of holding the trade for unnecessary long time, right? So we are still in it and we are still waiting. 4 more minutes left. Let's see. Oh, we are pushing down. Beautiful. The real question we gotta ask this 15-minute candle is this candle going to finish bearish with a wick at the bottom? Or are we going to close bullish? If the candle closes bullish, not a good sign. But if the candle closes bearish, yes, it's still looking good. It's looking just like the textbook trade we study and we take all the time. Oh, we are pushing. Beautiful. Oh, wow. Secure 10 pips right there. Secured 10 pips right there. Beautiful. Beautiful. Beautiful trade. A beautiful, beautiful trade here. Nice. Oh, beautiful. All right, so the 30-minute candle closed with the wick at the bottom, showing sign of continuation here. I mean, we are only pushing down here. By every minute passing, getting closer to the market open, we are only looking good to push down. More than likely, 1783.70 is going to be a early target for today. Yeah, this is going to be the target one here, right here. Oh. Oh, wow. We are pushing more. More and more here. Amazing. Beautiful. Pushing down even harder. Ooh, pushing down even harder. Wow. Amazing. 1783.70. Wow. 14 pips. 14 pips. Oh, 15. 15 pips. Pips. Oh wow, we are retracing now. Definitely retracing. Let's see. I've actually secured most of my position and only leaving a small percentage of runner running. I just want to see if the gold is actually going to pay me. Obviously, there's a news in the next hour and so, but still anticipating some volume here. New York volume. If the market's going to pay me more, I mean, it's amazing. So kind of keeping this idea in my head that my lovely friend Kevin has recently it reminded me of, go hard or go home. Obviously, I've secured most of my profits and I'm okay about whatever's going to happen with my position, this rest of the position. So I'm kind of okay with it. If it's going to move hard, amazing, go hard or go home. And I've secured most of the profits. So I'm okay about getting stopped out at break even. So it's pretty cool. Pretty cool. Let's see what's going to happen. Is it going to hit hard? Is it going to go down even harder? Or what's going to happen? Right, retracing. In about 23 minutes away from the market open. And it looks like this position, this small percentage is going to get stopped out at break even, which I'm entirely okay about. If it's going to get stopped out at break even, it is just as fine, because I was planning for a runner to run, and I practiced well, scaling, actually not scaling. I practiced letting a runner run, and that was completely fine. Whatever happened with the runner, I mean, obviously I secured most of my profits for the day, and that was pretty cool. Look at my position. I took it here in about 12 pips, secured around here, and moved down like 20 pips, which is pretty cool. Out of 20 pips, I managed to secure 10, and that was pretty cool. Got stopped out at break even, in about break even, which is okay, just as fine for now. Amazing pre-New York trade. Amazing. Everything about the trade was explained as it was happening, and this is just amazing. Simply amazing. Simply. Beautiful trade taken live. Amazing. Yeah. Amazing, amazing. All right, I think I'm going to call it a day here, because that was a beautiful trade, and I don't care whatever the... So might as well call it a day. It's an amazing day here. Oh, wow. Daily candle in gold is just looking amazing. Daily candle in gold is just looking amazing. Simply amazing. In about 200 pips range at the bottom. Obviously, we have this weekly support area, 1782 flat, but we might push all the way through it. Yeah. All right, guys, I'm gonna call it a day. I mean, you guys have a beautiful, beautiful time over there. We'll see you guys tomorrow one more time. But I'm gonna take a breather and I'm gonna take a rest now because I'm done with the market now. That's the beautiful thing about showing up early to the market. Sometimes what happens is the structure makes sense and everything makes sense. Volume, they show up, you know, slowly, one by one. The trade starts working out. It shows you a sign to play out. You manage your trade and you secure and you're happy. You actually, you're not happy. You're okay about your trade. You know, you should never be happy or sad about your trade. You should be okay about your trade, and I'm definitely okay about what happened. The result is amazing. Took a trade. I did all the explanation to myself. Was confident as the trade progressed, and one by one, candles started closing in my direction, and amazing. Right, so you guys take it easy. Take care. Until next time, we'll be back tomorrow. All right, beautiful.